What's up, YouTube? This your boy Jack of all trades, and I want to welcome you to a new video. Now, in this video, I'm going to show you the top 10 stock market terms that you need to know. Now, I make videos to teach you how to build wealth through the stock market, real estate, and entrepreneurship. I created my YouTube channel for 3 reasons. Number 1, to simplify investing for new investors. Number 2, to educate people on how to build wealth. And number 3, to motivate investors on staying on their grind, taking it one investment at a time. It's a marathon, not a sprint. Now let's get started. Number 1, a bull market. A market condition where investors expect prices to rise. So bull market is good. You might hear the term bullish, where investors or analysts expect the price of a specific stock to keep going up. They're bullish on that stock. So bull market, where analysts or investors expect stock prices to rise. Next is bear market. So it's the opposite, where analysts or investors expect stock prices to fall. So if an analyst is bearish on a stock price, it just means that they expect that stock price to not do well, to fall. Next term, sector. So you might hear that term in relation to a whole committee of stocks. So what a sector is, it's a group of stocks that maybe produce the same thing, market the same thing, sell the same thing, like energy sector, pharmaceutical sector, medical sector, technology sector. That's what a sector is, basically a group of stocks that do the same thing. Volatility. Now, volatility is how fast the stock moves up or down, right? And usually it's volatile because it can move up or down, with the snap of a finger, okay? And usually it moves up big or down big. That's what makes it so volatile. The quickness at which it moves, and also, how big it moves. Next term you need to know is called averaging down. Now, averaging down is when an investor buys the stock as the stock goes down, so as to decrease the price at which he purchased it. So if I already purchased, let's say, a stock price of $100, I purchased stock A for $100, but now stock A is $90. So I'm gonna purchase stock A for $90. So now I average it down to what, $95. I average it down in between $100 and $90, which is $95. So that's what averaging down means. Averaging down is good, right? Opposite of averaging down is what? Averaging up. And you can average up if you want, and a lot of times you do it, if you want to catch something before it gets too high. But usually you'd rather average down, wait for the dip, wait for it to go below what you bought it for, then get some more, right? IPO. I think a lot of you have heard IPO. You may not even know what the initials stand for. IPO stands for Initial Public Offering. And that just happens when a private company becomes a publicly traded company. So a company fills out all the necessary paperwork with the SEC and decides that they want to be traded publicly on the NASDAQ or the Dow Jones, or one of the three big trading platforms, and so That's what an IPO is when they get ready to be traded publicly. And you can buy shares of stock. So for a private company, you really can't buy shares of stock. There may be some loopholes in there that I'm not familiar with, but generally you just buy the share. You buy shares with publicly traded companies. Next term you should be familiar with is called market cap. This is a term that I always look at when looking at strong, solid companies that I think have a big future. Why? Because market cap means what the market thinks a company is worth, or what the market says a company is worth. So if the market cap is $57 billion, that's what the company's worth. So that company is growing. It's got a lot of money. A lot goes into that, but it's worth a lot. So you can sort of safely assume that it's going to be around. So let's say Apple, I think, has the highest market cap in the S&P 500. I think Apple's market cap is $1.97 trillion, almost worth $2 trillion. So Apple, and a lot of that is liquid. Apple's got plenty of money. Next, Microsoft, $1.6 trillion. These are the type of companies that we say big, huge market caps. And you say, oh yeah, I can believe it because Apple is not going anywhere, Microsoft not going anywhere, that type of thing. So market cap, what the market thinks a company is worth. Next, you should know this term very well, be very acquainted with it. Dividend. Dividend is a portion of a company's earnings paid to shareholders. Now that's something that that's a strategy people use. A lot of people buy only stocks who offer dividends, because not all stocks offer dividends. But dividends are a great source of passive income, and I have a few dividend stocks in my portfolio, and I'm in the dividend reinvestment program to reinvest them in the stocks, and because I think that's what I want to do. Not everybody does it. Some people get that monthly income per month and then maybe just buy different stocks with it, depending on how many dividends they can get per month. But dividend is when a company pays you as a shareholder part of their earnings. Okay. Now, next, you should know what a portfolio is, because if you have multiple stocks, you have a portfolio. A portfolio is simply a collection of investments owned by you. So you have a collection, 2, 3, 4, handful, you have a portfolio. So anytime you're talking about your investments, you can start calling it your portfolio. Okay. And now the last stock term that I think you need to know is called stock symbol. Okay, and a stock symbol is a 1 to 4 letter alphabet root symbol which represents a company listed on one of the stock exchanges. So Microsoft has 4 letters, MSFT. That's its stock symbol. Also called the ticker symbol. So you can call it either one. Stock symbol and ticker symbol are the same. AT&T has 1 letter, T. That's its stock symbol. Amazon, AMZN. They just took out the vowel, right? Or the vowel. So those are what your stock symbols are. Okay. So I hope these terms helped you out tremendously, especially if you're new to trading or to investing. And, we all need to research and go somewhere to get information. But I just wanted you to know these terms, just so you can start on that journey and understand certain things before you get started. All right. If this video was beneficial to you in any way, please hit the like button and hit the subscribe button. I appreciate it. Once again, Jack of all trades, Eric T. Jackson. And until next time, get money, people.